Hello, everybody. This is Dr. Mohammed Saeed Mo. I'm working as an assistant professor at Xiamen University, Malaysia. I'm really very excited to be part of ICFTBA. So it's really a wonderful opportunity to me and a good platform where I can share my thought related to emerging trend in the finance. So today I'm going to discuss about the sustainable finance, a revolutionary move by the financial sector toward the environmental sustainability. Before going to start uh, a formal discussion related to like how green finance or sustainable finance is related to the environmental sustainability, let me share some facts and figures related to environmental issues globally. Okay, when we say are developing countries suffering from pollution or other environmental related issues, so it is very important to share here that environmental issues are not only concerned with the developing economies. However, overall world is just suffering from the environmental issues. So here I have some facts and figures for the current year, climate change. As I have already mentioned, that's not only it is not only related to the developing economies. However, worldwidely, all the major economies of the world are also suffering from the climate change issues. Every year, we extract an estimated 55 billion tons of fossil energy, minerals, metals, and biomass from Earth. So the world has already lost 80% of its forest, and we are continuously losing them at the rate of 375 kilometer per day. Moreover, at the current rate of deforestation, from 5 to 10% of tropical forest species will become extinct every decades, and every hour 1692 acres of productive dry land become deserts. So these facts and figures related to environmental issues are very alarming. But if the situation remains the same without taking any measure, by 2050, without new policies, fresh water availability will be further strained, and global water demand is projected to increase by some 55% due to growing demand from manufacturing, almost 400%, and thermal electricity generation, almost 140%, and domestic use as well. So we have some more environmental issues, like air pollution is set to become the world's top environmental cause of premature mortality, overtaking dirty water and lack of sanitation. Further, a world economy 4 times larger than today is projected to need 80% more energy in 2050 without new policy action. So these are really very alarming figures. So if we are not able to take any timely remedy or steps, so we may suffer from a huge loss in the future, and our upcoming generation can be in a really a danger. So what happened, there are so many agencies, organizations, and few researchers from the academia, they condemn the financial sector. They argues that actually the financial sector ignored the environmental issues. So the financial sector, during the investment time, this sector actually has ignored the environmental issues, and that is the major cause of the environmental sustainability and environmental related issues. So actually, a new study by Mew and Cream 2022 has just found that the financial sector has ignored environmental issues. So that result in change in climate, pollution increases, and some other environmental issues as well. So actually, financial sector can play a very important role to improve the overall environment. But our is a bad like that. The previously financial sector has not given a proper attention to this global issue. However, currently the behavior of the stakeholders has been changed. Currently the stakeholder of the company, like society, like creditors, like investor, they are not only concerned about the like uh, only returns, only profitability, but they are also concerned with the environmental sustainability as well. So in the if we see in the past, ethics were not considered so important, because people used to think, managers used to think that if we follow the ethical policies and ethics, so it may reduce the profitability because of just some cost. So but today the behavior of the consumers, behavior of the investor, policymakers and governments has been changed. So peoples are now more concerned related to environmental information that must be included in the financial statements. So they like to be they like to having returns, but they like having some environmental issues as well. So in the current era, ethics sells. Actually, if you are following the ethics, so your company grow as compared to some uh, other companies. So in the current era, it's most important for the financial sector to take in account the environmental issues as well, along with the profitability. So what happened now, the world taking initiative, the world is concerned world is most concerned about the you can say environmental issues and some social issues as well. Anyway, uh, in 2015, agreement was like we call it a Paris agreement was done. Actually, there were 196 countries involved in this agreement, and they all decided to keep the minimum level of temperature. So the main goal of Paris agreement is that uh, its goal is to limit the global warming to well below 2, or preferably 1.5 degrees Celsius. So the prime objective of Paris agreement is that to keep the uh, temperature in a minimum scale, or in a minimum level. So for this, uh, we can see that world sustainable development goal as well. There are total 17 goals, and out of 17, 8 goals particularly talk about environmental sustainabilities, that include clean energy, that include health, sanitation, clean water, etc. So so after the major concern of the world toward the environmental sustainability, financial sector also took a step. We call it sustainable finance, we call it green finance. So a new branch of finance introduced actually in back in 2007. So what happened after the pressure of public, of stakeholder, of the company? So now financial sector introduce a new you can say a instrument, a financial instrument that actually care about the profitability as well as environmental sustainability. So we call it a green bonds. Actually, there are so many other products of green finance or sustainable finance, but most famous is green bonds. Actually, green bonds introduced back in 2007 by the EIB, and the name of that bond was climate awareness bond. So we call it the green bond. So there are actually four major principle of green bonds, like use of proceeds, process for project evaluation and selection, management of the proceed and reporting, etc. So how green bonds actually differ from the conventional bonds, that if you if you invest in the green bonds, you exactly knows that where your money is being engaged, where your money is being um, invested. So the proceeds, so the funds from the green bonds collected by the green bonds are purely invested in those projects which are pollution free, or which are such kind of the project that support the sustainability. Okay, so actually, we can discuss here that what is the trend in growth of the green bonds. Actually, 11 billion, that was the total market of the green bonds in 2013. That was the near 11 billion. But if we talk about 2021, it is almost near to 500 billion. But over the time, the market of green bonds is increasing, growing. But still, if we compare green bonds market with the conventional bonds markets, so it is almost equal to 1% of the conventional bonds. So it means that it is a very small market in front of conventional, that is a very giant, a very big financial market. So 1% capitalization, total capitalization, or total market of green bonds shows that there is a huge potential. So there can be so many other reasons that why it is only the 1% of the conventional bonds market. So later we can discuss. Actually, I have some future recommendations, so there we can discuss that why there is a 1% actually. Okay, so what happened, everybody now like green bonds, because green bonds provide you an opportunity to reduce the environmental issues, like pollution, etc. But do you think that green bonds really can reduce the environmental issues or not? So for this, recently a study was conducted by Mayo and Cream 2022, and this study actually conducted based on top 10 countries which having the green bonds, that use the green bonds. So Canada, Denmark, Hong Kong, Japan, New Zealand, etc. These were the countries that having the highest capitalization of the green bonds. So this study actually studies these countries. So Mayo and Green findings actually shows that there is a negative relationship between green bonds and CO2 emissions. So this study says that by increasing green bonds, we can reduce the CO2 emission. So this study also can be supported by the findings of Lee and Gia 2017 and Sex 2015. So who also support that green financial instrument can help in achieving a green environment. So why the green bonds market actually is 1% as compared to the conventional bonds market. The main reason is that people having no awareness about the green bonds markets. So and there is an other thing that uh, investor actually like to earn more profit rather than to having like to having so much share of its investment in the environmental sustainability. So people actually don't have a knowledge related to either if they invest in the green bonds they will get a handsome return as well or not. So actually green bonds are majorly famous just because of that these are the financial instruments that are used to reduce the environmental issues. However, there are a few studies that motivate that green bonds having the properties of hedging, properties of diversifier, safe haven, etc. So in the future research, there should be a study like green bonds can provide you diversification opportunities or not. So such kind of the studies can motivate the new researcher, can motivate the new investor or existing investor to invest maximum in this market. So if we invest in this market, we can get two types of the benefit. Number one, we can get the maximum environmental sustainability, and we also can have return on our investment as well. So this is all about my presentation, that is green finance and environmental sustainability. So this is a emerging area in the finance, so but that have a huge potential. So you can research and you can produce some recommendation for the policymakers, for the managers, and for the society whole. So thank you very much for your time and your attention. Thank you. Bye. Take care.